When considering a new loan, whether to purchase or refinance your property, it's important to know and understand the costs that may be associated with your transaction. These are referred to as closing costs. I'm Austin Lampson with OnQ Financial, and this brief video will help you guide and understand the closing costs that may be associated with your loan. First of all, it's important to note that closing costs can vary depending on your personal circumstances. Property location, down payment amount, credit parameters all come into play when determining the cost of purchasing or refinancing your home. Let's take a look at the breakdown of closing costs and how they come together to total the amounts needed to close your transaction. By law, a lender must disclose all estimated closing costs associated with the loan within 3 days of your application. At this time, you'll receive a large set of disclosures that cover everything from closing costs, your personal information, and state and federal regulations. The document we want to focus on today is the itemized fee worksheet. We provide this document to help delineate the fees and costs associated with your new loan. In conjunction with the good faith estimate, also known as the GFE, it works to provide you details of your transaction. Please note that the good faith estimate is a federal disclosure required on all mortgage applications. The itemized fee worksheet should never be used to override or negate the GFE, but instead we use it to supplement. When reviewing the itemized fee worksheet, it's important to note that the numbers on the side, section 800 for example, relate to line item numbers you will see on your settlement statement issued by your closing company. Let's start with the top of the document. The top of this worksheet outlines both your and the lender's information. It lists the property in question, your proposed loan number, and the general terms of the loan. The next section goes over estimated closing costs, otherwise known as the fees associated with your loan. These are both fees from your lender as well as the closing company, so let's break it down further. The left side of this page lists those items that are payable in conjunction with your loan fees. The numbers on this side, section 800, relate to line item numbers you will see on your settlement statement issued by your closing company. Our loan fees for processing, underwriting, and doc prep are also called your origination fees and are listed on lines 800 through 803. Charges for other lender-required services that we order are listed in section 804 and below. The estimated appraisal fee, line 804, and the credit report fee, line 805, are both paid to third parties with whom we work for these services. If you have an FHA loan, then your upfront mortgage insurance premium would be listed on line 900. Most of the time, this fee is financed into the final loan amount, which is reflected on the second page and will be covered in just a moment. Moving to the right side of the page, we will now review costs from your closing company. In California, we are an escrow state. That means that an escrow company is used to facilitate the closing of real estate transactions. Whether a purchase or refinance, your transaction will involve an escrow company. Many times, the escrow company also does the title or deed work on the transaction. Hence, section 1100 is called title charges. The section of fees that are determined by your escrow and title company are not your lender. In fact, you have the right to choose the title closing company. If you're purchasing a property, the selection of the closing company is listed in your purchase contract and agreed upon with the seller. Also, note that in Southern California, there are two title fees that are typically paid by the seller in a purchase transaction. These are the owner's title policy, line 1103, and the transfer taxes, line 1203, which are payable to the county. Fees paid by your seller are designated with an S next to them and are offset on the second page of the document. Since these is not always the case, it is important to know that what you agreed upon in your contract is binding. In Northern California or in a short sale situation, many times you, the buyer, are responsible for these instead. Finally, at the bottom of this section is the summary of the total of all fees listed on this page, total estimated closing costs. Since we talked about fees with an S next to them, let's also address those with an A next to them. Fees and costs with an A next to them are finance charges. A finance charge is any fee representing the cost of credit or the cost of borrowing. Finance charges with an A next to them are included in the calculation of your annual percentage rate, or APR. Now let's move on to the second page of the itemized fee worksheet. The estimated reserve and prepaid costs section outlines costs that may be required to be paid at closing. These are items that are recurring in ownership, such as property taxes, interest on your loan, homeowner's insurance, and mortgage insurance, if applicable. Starting on the right side, you will see line 901 indicates interest. Interest is paid from the funding date to the end of the month. Interest on your loan is always paid in arrears. For example, if your loan funded on November 15th, you would pay interest from that date to the 30th, and your first payment would then be January 1st. The January 1st payment thus covers the interest for the entire month of December. When buying a property, it's also common for the first year's premium of homeowners or hazard insurance to be paid up front. This is the cost listed on line 903. The actual amount of the insurance will be negotiated between you and your insurance carrier. Other items included in this section would be upfront charge for mortgage insurance, flood insurance if required, or the VA funding fee. Moving to the left side, you will see Section 1000, which lists reserves deposited with the lender. These are the amounts needed to set up your impound account. Having impounds on your loan means that you pay your property taxes and homeowners insurance and mortgage insurance, if required, monthly with your mortgage payment. In California, it's required for loans with less than 10% down or any government loan. By paying this monthly with your mortgage payment, your lender then pays the bills as they become due. The bottom line of both sections 900 and 1000 is listed as the total reserve/prepaid costs at the bottom. The last section of the itemized fee worksheet summarizes your transaction. The left side will outline your estimated payments for the property being financed and includes outside dues like your homeowners association, if applicable. In the closing cost summary section, you can see the sums of each of the previous sections we reviewed, including any credits for costs that are being paid for by the seller, those S fees that we listed from the first page of the worksheet. The right side gives you a total estimation of cash needed to close by recounting purchase price, closing costs, prepaid items, and any offsets for credits as listed on your purchase contract. This is also where you'll see if the FHA upfront mortgage insurance premium or the VA funding fee is financed into the final loan amount. Lastly, any seller-paid items are going to be listed as non-borrower paid closing costs and are thus deducted from the total amount due. The bottom line to you is listed as the cash from borrower figure at the bottom. As you can see, there's a lot of specific costs that are associated with home financing. While some are one-time fees, others are recurring, and it's important to know the difference. Remember that any fees that are listed on your disclosures are estimates only and are able to change throughout the transaction and as it progresses. I hope this has helped you to understand and know the costs of obtaining a mortgage. If you have any additional questions or need any assistance with your mortgage, please contact me. I'd be happy to help. Info is at the bottom.